not a man to mince words, and I hope you don't, Ajay. Good morning. Great to have you with us here. How are things looking, Ajay? Almost at 20,000 and then, well, boom, in fee. So a bit of a setback this morning. But near to medium term, what's your stance?
Well, the stance is very simple. We don't buy at this point of time. Certainly not buying anything in the large caps in the market at this point. There are selective stories which are coming around, which are newer themes in the market, which possibly are decent buys. Some good results are coming out. One or two good results came out yesterday, which could become a potential. But by and large, it's like you watch your portfolio is doing well, your shares are doing well. You don't want to commit capital at these rates. I think I am still in the side of the FDI, the PE funds, which in cash at the highs, and they're in cashing from the Indian market, then on the side of the FIs who want to buy at this rate. So I'm sorry, party spooker saying better to sell, book your profit, than to buy and worry about how to make a return on stock prices like this. It's just incredible disconnect with the reality. And therefore, one has to be very careful what it's doing with the capital. Incredible, absolutely. I think it's, one would say that cannabis is legal in this country, I think.
Oh dear.
It's okay, Ajay. You don't have to be sorry for your view. I mean, there are all kinds of views in the market, right? That's what eventually makes the market, I guess. But there's no stopping this rally. At least that's the sense that you're getting. I mean, 15% in 3 months? It's been ferocious, right? What do you do at a time like this when earnings are not that supportive? So if you are, say, invested in names like Infosys, HCL Tech, TCS, and you see such subpar earnings, what do? Do you churn out or do you just book your losses?
See, I think, it's important to focus on the one which are more transient in nature, where you have booked a decent profit. I think these are bellwether stocks. They will see their ups, they will see their downs. And if it's part of your core portfolio, just leave them alone. They will have the bad days and the good days. The problem is that you have to start looking at encashing the weaker parts of your system. I think that's where the portfolio focus is. So one is keep churning out the weaker parts of the portfolio, which don't have a good story. Number two is churn into newer stories. As we have seen, this country has done an amazing thing, newer stories. You have an airport lounge company going on to railways and roadways doing phenomenally well. You got your own fintech companies online, which are doing extremely well. So, we get stories of defense coming out. You saw what happened to the drone story coming out in 2 or 3 companies. So I think the focus of investors should be on capturing the newer stories, then to look at the older stories, because the return on capital employed, that's the key question. You get 9 to 12% today yield in the debt market. Now, how do you beat 12% yield of the debt market instrument by equity and with a margin of risk? That means you're talking about 18 to 19% threshold rate of return on equity. So you got to be very stock focused and says which of the stocks is going to give you the return of 18, 20%. Themes are not important at this stage. What is important is you are in a new age stock. Are you into new themes, or are you still batting with the old fuddy-duddies, autos, and so on and so forth? Because these are not going to give you 18, 20% returns. So I think the mood is newer age, newer stocks, newer themes, and catch them young and early rather than buying at a bigger and higher level and the older stocks. They're not going anywhere. Indian consumer story is not going anywhere this year. So people who think that the great story of retail is about to unfold should be very badly shaken when the results start to come out.
Okay, all right. Ajay, just hold on to that thought. As we speak, the Nifty, that buy on dip has worked yet again. We are 100 points off the low point of the day. The Nifty Bank, as we pointed out earlier today, that has to play a stellar innings. And at least for starters, it's got its eye in. It's seeing the ball big and it's smashing it for the time being. It's up close to around 125 points approximately. And though Infosys is down, that's why the Nifty IT index is down. But you pull up some other stocks. Emphasis has almost moved into the green. It was down close to 4% a short while back. LTI, Mindtree as well has moved up. LTTS as well. So these stocks have recovered at least 2 to 3% from the day's low. Even Coforge now is up close to around 1.5%. Well, Ajay, you were talking about getting into some themes early and identifying them as well. Help us out with some of them. I mean, our viewers would love to know.
No, I just told you, like some of them are very discovered themes. It's nothing new. They look at this airline launch company which started, which is an unknown theme in India, and look at where it has gone. You will see in the defense company, the smaller company, the drone company, look at where they've gone. For a change, the aviation stock has gone into a different orbit altogether. The competitive scenario has changed. So you are in a safe zone. There's no competition. So the key is look at the sectors which have no competition. If you look at this online fintech space, there are only 2 or 3 companies there. Banks may try to come into the space, very difficult at this point of time. So you got Fintech, you got lounge, you got airlines, you got limited amount of hotels. I think they are running out of space at this point of time because homestays will challenge them in the next 3 years. I think hotels have largely done their bit, to my mind. They may not give you that much return. And then, of course, you just mentioned your defense companies, which continue to be a scarcity element in the country at this point of time. So, so put together this basket, pretty decent basket, which comes around to you. And then you have the regular stocks that you, of course, always have in a portfolio, whether it's some metal stocks, whether you got some commodity stocks, which give you very hefty dividend returns. So built up the portfolio looks good. And as you said, market is in an extremely bullish mode. As I said, when you are in the party mood, you really want to keep having one more. The question is, next morning when you wake up, did you really want to have that one more?
Cheers to that.
Well, okay, that's well put. Ajay, ITC, I think we've talked about this in the past, and I know it's been the longest-standing buzz, the demerger of the hotels business, but it's there and it's getting louder once again. Just wanted to ask you, at where it is now trading at ITC, if an announcement of this nature was to come in, is it in the price, or you think it could spur another move higher?
See, okay, for disclosure, we have a holding. So to that extent, we are biased on this one. I think it will spur higher. And I think the reason it will spur higher because it is a start of a process of a thinking. And I think it started with a new CEO 2 years back who started focusing on return on capital employed. So if they split it out, I think what will do, two things will do. One, allow the investor to own the hotel separately and decide to get out of hotel should it want to at some point of time. And number two is focus more on the cash generation businesses, like FMCGs become cash positive, the tobacco is positive, and therefore the dividend returns would become absolutely phenomenal of this stock. And you don't have an overhang that tomorrow we'll just spend 500 crore, new CEO comes on the hotel business. So I think it's more than just the demerger financials. It's a statement of intent that we're going to keep a cash flow engine of the FMCG company running without any serious capital commitment. That's a big significant shift. We'll see a major bump in the market if it happens, if they do a pure demerger. That's a wonderful thing for the market. You saw what happened in Reliance, an ordinary company which had no track record came out and the market had a blip. Now, whether the blip sustains, we don't think so, but whether it, for the time being, it did. I think ITC, on the other hand, is a much more powerful thing because you have a split of a good quality operating asset which can have a miles to go and miles to run in a two. It's like an aviation. It's a two-leg race in the market for hotels. Just two groups or maybe third lemon tree in the middle of it. But I think it's a two-sting, like Airlines.
Sure.
Love these two duopolies who both want to make money. Unlike the telecom, where one guy decided he doesn't want to make money and the whole sector went for a toss.
Okay, by the way, don't lose sight of what's happening in the market. So the Nifty has recovered almost 100 points from the day's lows, and this is courtesy the banks. The banks are really batting for the bulls hard. So bank Nifty is up almost 130 odd points. So keep that on your radar. Definitely some buying coming back. But Ajay, another space I wanted to ask you about was this whole home improvement theme, right? Because not just Polycab, which was definitely the stock of the week, very good numbers there, but even others in that space, whether it's Havels, whether it's Finolex Industries, margin improvement has been steady, and so many more coming up now in the next couple of weeks. Do you think this is a space to latch on to despite the expensive valuations?
Sonia, just to come back to the market, I think if you look at what my desk is telling me is the story lies in the futures of Nifty. While the Nifty was down almost 0.9% or 1% in the morning, the futures were only down 0.3% at the worst part of the day. So I think the story is unfolding on the future side more even than the cash side as to where the buoyancy and the confidence is coming. And so I think the pointer, just for the investor's sake, should be just keep looking at the futures more than the cash, because that gives you the pointer where the mood of the market is at this point of time. Coming aside to the home improvement theme, I think the theme is doing well. The real estate boom has just started in the sense of the kind of construction and the projects launched. They will see a good trajectory. Having said that, I think someone like Polycab, they got a big benefit of exports. It was not really, if I'm not wrong, my research report says it's more export that gave them the benefit than domestic. But I think the story is steady, except the fact, and I think this is an important part, except the fact, I don't think these stocks will give you a healthy return. They've factored in a lot of growth in them, and a slight wobble on the real estate also side could take them apart. So I think they are overpriced, if you ask me. Whether any other stocks, certainly overpriced. To get a return on this means that they need to perform at 140, 150% of the projections. market mood can do whatever it does, but for them to perform and give you a 20% return in the next 3 years, they need to do a really heavy lifting. I'm not sure. And real estate developers, mind you, Sonia, extract a very steep bargain when they buy from these companies, the product in bulk. And, and that is where the bulk of the market is going to come from, the real estate developers. So my guess is you will see, and you saw in these results, margins are still squeezed, even though volumes are up. So as a sector, would it outperform the market? Answer is no. Would I buy them? Answer is no. Will it seem too expensive? Absolutely too expensive for the growth that is going to come to them.
Okay. Well, Ajay, we would have loved to continue this discussion, but we have many companies that are lined up and, some of them in the IT space, which is, of course, top of mind. So we're going to take your leave now. Thanks a lot for joining us and have a great weekend.